Whether you work or not, 1,000 in dividends land in your brokerage account month after month. That's nice thought, isn't it? How much money does one need to have that kind of income? Do you have to be a millionaire, or can a person with an average income make it? Let me reassure you, you don't have to be a millionaire. Let's look at it together. I'm Jiri and this is my YouTube channel Invest with Jiri. I cover everything about working with money here. Saving, earning, capital protection or investing. I have also made several videos about specific stocks. In parallel, I'm working on expanding my Patreon, where I'm creating more content, company analysis, news from the world of investing or calculators for company valuations. You can find a link in the video description. What are we looking at in today's episode? I'll discuss a plan to reach $1,000 per month by investing in dividend stocks. I'll explain the basics around dividends, what companies to choose, and how much capital I need to do so. Before I begin, we need to get the basic facts about dividends straight. A dividend is the amount of money a company pays out to its shareholders as a share of its profits. Companies usually pay dividends as a reward to their shareholders for holding their shares. I will give some key facts about how dividends work. The decision to pay out is usually made by the company's board of directors or the shareholders meeting. The decision depends on the company's financial performance, profitability and the profit distribution strategy. Dividend yield is an expression of the ratio between the dividend and the market price of the share. Dividends are usually paid on a quarterly, semi-annual or annual basis, but there may be other time intervals. The frequency of payment varies between companies and is determined at the discretion of management. Ex-dividend date. This is the record date for the dividend. If someone owns shares in the company before the ex-dividend date, he is entitled to receive the dividend. However, if someone buys shares after the ex-dividend date, they are not entitled to a dividend. Dividend reinvestment. Shareholders have the option to reinvest their dividends to buy more shares in the company, which is called dividend reinvestment. This increases their stake and potentially future dividend income. Tax considerations. Dividends are taxed in most jurisdictions. The level of taxation varies by country and tax regime. Why are dividends so popular with investors? Dividends are an important part of investment income for many investors who prefer regular payouts and seek long-term value in dividend-paying securities. Let's take an example of how many dollars you would receive if you held 100 shares of Coca-Cola ticker Co. If Coca-Cola declares a dividend of 50 cents per share for the quarter, I can calculate the dividend income as follows. Assume you hold Co stock through the ex-dividend date, which is set for June 1st, 2023. The dividend payment date is then set for June 15th, 2023. What will the calculation of the dividend income look like? Number of shares 100. Dividend amount per share 50 cents. Total dividend income equals number of shares times dividend amount per share. Total dividend income in dollars equals 100 shares times 50 cents equals $50 per quarter. If you hold 100 shares of Co stock through the ex-dividend date, you can expect to receive $50 on the dividend payment date. How high will the dividend yield be for a year of holding Coca-Cola stock? To calculate the dividend yield, you must know the dividends earned for the year and the amount invested in stock. The amount of dividends received for the year. The company pays a dividend quarterly. I have already calculated that you will earn $50 in quarterly dividends with Coca-Cola. Now you simply multiply $50 times 4 quarters to get $200 per year. Amount of investment. 100 shares of Coca-Cola bought at $47 is a total of $47 times 100 shares equals $4,700. To calculate the dividend yield, you use the formula. Annual dividend divided by amount of investment in the company equals dividend yield. So $200 divided by $4,700 equals 4.2%. The dividend yield can be found at the current share price directly on the website, e.g. finance.yahoo.com. You enter the ticker code and in the dividend yield section you will find the value you are looking for. Which basket of dividend titles will I choose from? I always like to pick investments based on a specific basket of stocks. In today's example, I look at the Dow Jones Industrial Average, DJIA, or simply the Dow. It's one of the most famous stock indexes in the world that uses a weighted average of the stock prices of the 30 largest and most important companies operating in the US stock market. The Dow was founded in 1896 by Dow Jones and Company, and its main objective is to provide an overview of the US stock market as a whole. The index includes companies from a variety of sectors, including technology, finance, industrials, healthcare, and others. Some of the companies that are included in the Dow include Apple, Microsoft, Boeing, Coca-Cola, Goldman Sachs, Johnson & Johnson, IBM, McDonald's, Nike, and others. The Dow is tracked by investors, analysts, and the media as an indicator of the overall performance of the US stock market. Changes in the value of the Dow often have a major impact on global financial markets and are an important indicator of economic sentiment. Let's pick specific 5 companies from the Dow that offer the highest dividend yield and will also be from different sectors to diversify the mini portfolio at least a little. I used a downloaded spreadsheet from fringescreener.org to filter highest dividend yield. The first column of the table shows the company names: Verizon Communications, Walgreens Boots Alliance, the Dow, Intel Corporation, and 3M Company. The second column shows dividend yields for each company from 6.31% to 4.7%. And the third column lists the sectors to which each company belongs. We have telecommunications, pharmacy and retail, chemicals, technology and semiconductors, industrial products. In summary, these 5 selected companies have an average dividend yield of 5.26%, which is a very nice number. Just to add, 5.26% is a pretty high dividend yield that the selected companies may not sustain in the coming years. That's something to keep in mind as well. How much capital do I need to invest for a monthly income of $1,000? Let's calculate the annual dividend yield I need. $1,000 per month times 12 months in a year equals $12,000 per year. I then divide $12,000 by the assumed average annual dividend yield of 5.26%. $12,000 divided by 0.0526 equals $230,000. This means I need to invest approximately $230,000 in selected companies with an average annual dividend yield of 5.26% to pay us $1,000 per month in dividends. This is the amount before taxes. Is $230,000 in investments too much? I won't go into too much detail here on how to save that amount, and refer you to my Investing Examples playlist here on YouTube, where I show in several videos using practical examples how a person with an average salary and sufficient discipline can reach much higher amounts. I'm glad you are interested in dividend investing, because I think they give people a long-term perspective on investing in stocks versus short-term speculation in the financial markets. If you find the video useful, please give it a like, and I look forward to seeing you next time. Have a great time and invest wisely.